you were talking to agents going into next year, maybe they're watching this on January 1st, what do they need to be doing? Like, how do you start your year to set yourself up for success? Welcome to December's Market Snapshot. It's the holiday season, and we are also in prediction season. So we're going to talk a little bit about what happened last year. I'm here with the lovely Joy Powell.
Happy to be here. How are you?
Good.
Good.
Ready for the holidays?
Yes. So holiday season, prediction season, and recap season. So what are we going to talk about?
So three things as always,
Yep.
right? The first thing, we're going to recap 2024. Second thing, we're going to get into, what are the kind of consensus? What does the market think about 2025 and the housing market in particular? Then you got some advice for everyone.
All right. So what happened in 2024?
So, main themes that kind of defined the view of the macro economy last year were, we were in the battle to fight inflation.
Yep.
Then we declared victory, right? The Fed said we're going to start lowering rates. That was a big transition.
Yeah.
So, we saw a couple of decreases. We've seen a 0.5 point and a 1/4 point. Probably, when you guys watch this at the end of the year, Happy New Year, everyone. We probably will have seen another 1/4 point decrease in theory. So that's all good progress. We've seen mortgage rates move around a lot. We talked about this kind of in depth at different times this year, which is that the mortgage rate's not going to move one-to-one with what the Fed's doing. It's going to take time. We expect rates to come down over the next year. We'll get into that a little bit when we start talking about 2025. But this year we did see them come down some. And we saw unemployment go up some. That was a little bit part of it. And the other part is hiring has slowed down.
Yeah.
When we talk about the JOLTS report and what's been happening with job openings versus unemployed people, we've seen the total number of job openings come down quite a lot this year compared to the total number of unemployed people. There had been a pretty big gap there, which was what was driving a lot of the wage increases that we saw over the last couple of years. They've come much closer in line. It's one of the things the Fed actually pointed to when they talked about why they feel like it's time to start lowering rates. In terms of like the overall economy, like GDP, we're looking at coming in around 2.5%, maybe a little bit higher, which is a really good number.
So for normal people, what does that mean?
It means the economy is growing,
Okay.
which is good, right?
Yep.
More jobs, more money, bigger pie to divide up amongst everyone.
Got it.
Typically anything positive is good. 2.5% is like very stable. 4% is like awesome. 1% would be talking about, it's a little bit sluggish. So we're kind of in good like middle ground right now for the economy.
So we've talked a lot about 2024. What did the housing market actually look like?
Yeah, so slow year for home sales, right? We're looking at probably a pace of 4 million.
For a normal person, 4 million is good, bad?
Pretty bad, honestly.
Oh,
That's
okay.
pretty slow. Like we haven't been at those levels since really like the 90s.
Wow.
That's sort of one of the main themes for this year, right? Like higher mortgage rates and this like mortgage rate lock-in effect thing, right? Everyone's sitting on pandemic level, like, sub 3, sub 4% interest rates.
Yep.
It's hard for people to part with them. So that's taken away a lot of inventory out of the market. And that was kind of one of the defining features of this year. So we got, kind of high interest rates and this mortgage rate lock-in thing. We saw the slow sales pace, 4 million sales where we're probably going to come in. But because we were coming off of such low inventory coming into this, we've actually seen a fairly decent jump in prices. We're looking at potentially like 5+% when we get to, when we look back at this year.
Did we expect that?
We did not. Like at the beginning of this year, we were literally expecting like low single digits. It slowed down at the end of the year. So, the last couple of months, we've been closer to like 4% year over year. And it seems like maybe that's trending down. We'll talk about in a minute what we think 2025 is going to be. And then the other kind of trend we saw emerge at the end of the year was kind of increasing inventory. So in general, we're just seeing finally some more houses start to come on the market. And
Yeah.
the challenge is the demand side is still slow because affordability is a challenge. But the good thing is there's more choices for people. Inventory is increasing. And that at least provides the opportunity for home sales to grow as we
Yeah.
go into next year. And those are kind of like the main, themes that we saw over this last year.
Sales were, would you say 4 million, right? But prices have kind of increased. But now we're seeing an increase in houses on the market towards the end of the year, which ultimately the more houses on the market will end up driving prices down a little bit more. So do we see that in 2025?
Looking at 2025 in terms of the economy,
Yeah.
we think much of the same. is really like we think unemployment is going to stabilize. We're looking at probably 2% GDP. The big question is really mortgage rates.
Yeah.
Right now, we kind of see them staying above 6%, which is progress if we can get down to 6%, right? But like not as quickly as I think a lot of people would have hoped. Earlier this year, when you've told them like the Fed started lowering rates, I think they would have been saying, oh, great, like rates would be moving down quickly. So we're looking at maybe by the end of the next year being down close to 6%. Most of the forecasts right now are for mortgage rates to kind of stay in the 6.5-ish% range, maybe plus or minus a couple tenths of a point throughout the year. And the end of the year, kind of the most chance for them to substantially dipping.
I think that's a really valuable lesson, actually, because I think that at the beginning of 2024, there were a lot of people that were in a holding pattern. They weren't going to purchase because they expected rates to drop. And then all of a sudden we look up and it's October and they didn't really. They kind of stayed the same. So there's an influx of people, at least in my experience as an agent here in Austin. They're like, I got to buy. Whatever the reason, right? My lease is ending or it's the new year or something. And so going into 2025, interest rates kind of staying the same, I think is a lesson to be able to tell people, like, if you got to buy, you got to buy. Or if you want to, like, let's just find the most affordable path for you to, because interest rates are not going to drastically change and it's not really going to change what you're looking at. In fact, prices of houses will only increase. So you're really kind of shooting yourself in the foot a little bit because you're not saving yourself any money by taking time to wait for interest rates to drop.
Yeah, exactly. Like if you're trying to wait them out, you may be waiting years, not months.
Right.
Now we've seen, typically from the time that the Fed starts to drop rates to when mortgage rates kind of move down to like their new sort of like low or leveled off area, like it take 4 years. It's not a fast process historically speaking. Back in the 90s, it took 4 years. In the 70s, it took 4 years. Like 4 years is kind of a recurring theme with how long from the time the Fed drops their rates to where they're going to be and how long mortgage rates get down to where they're going to go. So,
and the chances of you moving by the fourth year are much higher than interest rates dropping in those 4 years because people move between 3 and 7 years, right? And if you're not, then you just refi. I feel like that's a really positive part of that whole thing is if you're going to stay in your house, just refi when the rates do drop.
And that points back to one of the kind of housing themes of this past year, which is this mortgage rate lock-in effect, right?
Right.
We're still going to be dealing with that some as we get into 2025. Like it's not going away, but time will create progress there. We're already seeing inventory levels starting to increase. We saw them, it really kind of started to turn in the second half of this past year.
Yeah.
Going into this year, we think that pattern is going to continue in most of the country. I mean, we've seen a lot of markets that are up, 25% or more from where they were this time last year.
Yeah.
Which kind of brings us into like, what do we think for the housing market next year, right?
Yep.
So right now, the kind of consensus forecast, when you go look at what everyone's saying from Fannie Mae to even what NAR or Zillow or any of like the industry forecasters out there kind of throwing around, we're looking at probably home sales going up to about 4.25 million from this past year ending probably around 4.
And what does that actually mean? So I'm a consumer. We're going from 4 to 4.25 million. Like I'm just a normal person wanting to buy a house. Like what does that actually mean for me?
It probably has the most effect on like how long it takes for your house to come off the market, right?
Oh.
Because it's really a measure of supply and demand. So what we've seen is, things like days on market kind of increasing over the last couple of years. That pattern's probably going to persist into next year.
Yeah.
So it'll be really important for people to like price their houses accurately.
Yeah. And what I find, at least from my experience, is, the people that bought during COVID that are now selling still have that COVID price in their head and can't get the same that they bought it for. So they're actually selling for less or for what they bought it for a couple of years ago. Do you think that sort of pricing mentality is going to persist into 2025 because those same people are now going to be either selling and wanting to rebuy?
So what we've seen in the last few months is the number of existing listings with price decreases has like definitely increased some. We'll probably see elevated levels of price decreases happening regularly on listings over the next year, just kind of how it's been this last year.
Right. So it's the most important for an agent right now to understand that this may persist. It's also most important for an agent to be able to explain that to a consumer who may have higher expectations about what they're going to get for their house.
Yeah. And then talking about prices, right? Right now, most of the projections for where prices are going to go next year is about a 3% increase, 3 to 3.5%. So a pretty decent slowdown. And we talked a little bit about mortgage rates already, right? Like we think, going into the beginning of the year, we're sitting in the high sixes. By the end of the year, we're probably in the low sixes, maybe pushing into the upper fives as things go really well in terms of like our ability to get interest rates down.
Fingers crossed. Yep.
Yeah. Right now, the consensus is we're going to see a lot of like 6.5-ish rates probably throughout a big chunk of next year.
So the message is consistency, pretty much.
Yeah, like there's not going to be any huge changes. The downside risks right now kind of come from outside our industry probably. We'll see, we're getting a new White House administration. That's a big transition. So, usually the first 100 days of that, we're going to get an idea of like what their policy objectives are. So once we get into March, we'll have a lot better idea of sort of how that's going to impact the overall economy and how much of it's going to address anything particular to the housing market. But it's going to take a couple months to get there to kind of understand where we are.
Like I mentioned a second ago, we're all holding our breath, consumers and agents alike, trying to figure out what's going to happen in 2025. Is it going to go up? Is it going to go down? What conversations do we have to have with sellers and buyers? And I feel like it's really the same ones we've been having.
Yeah. And so, if you were talking to agents going into next year, it's, maybe they're watching this on January 1st. What do they need to be doing? Like, how do you start your year in order to be ready for to set yourself up for success?
I think, the biggest thing is going back to the basics, truly understanding that real estate is a contact sport. And if you know your numbers and you know how many people you need to talk to and you know how many appointments you need to go on, you're going to be okay. Because at the end of the day, things are staying the same. So you know exactly what conversations to have already. And I think what we learned, kind of everyone holding their breaths around mortgage rates and the Fed rates dropping and how that's going to impact everything, is not only do you need to stay in contact with the people in your life and getting new contacts, but also your lenders. Because every single day, I at least talk to a buyer that's like, well, the rates went up or the rates went down, and they change every day, obviously, right? We're all kind of waiting to see what's going to happen. And so the more contact we can have with our lenders, the better off we're going to be. Because old adage, what you do today shows up in 90 days. And I think if we keep that consistent kind of quarterly mentality, by the end of the year, we'll all have met our goals. That's really it. A lot of people slow down over the holidays. We're looking directly into January of 2025. And the sooner we get started, the better off our springs will be.
Yeah, absolutely.
Yeah. Well, thanks, Ruben. I feel like I learned a lot today.
All right. Well, thank you guys for watching our market snapshot. Click subscribe and join us again next month as we get into 2025.